What is going on, YouTube? Kevin here with Bullish Bears with another fantastic video for you guys. Today's topic, how to consistently improve our trading, whether it's our trading setups, our trading plan, our trading execution, or just our trading journey in general. So this is going to be a really fantastic video. I'm going to go over some topics just like bias, just like risk management, being able to trade with a community, and so much more. And this is a great video because it covers things that both beginner traders and experienced traders should be aware of, so we could all consistently move forward in our trading journey and adapt to when the market is changing, because we have to change with the market. Alright, let's get into it. Alright guys, so the first topic we're going to go over is mental toughness. So it's always important to stay calm during market consolidation periods. It's always important to stay calm during any market periods. Whether we're in a trend, whether we're in a consolidation, we don't want to feel antsy, we don't want to feel FOMO, we don't want to feel the need to jump into a trade. We want to be cool, calm, and collective. The market, we have to look at it like it's a job. We have to meet certain criteria for us to enter a trade. We are not gambling. We are smart with it. We look for confirmations. Practice techniques for managing stress and emotions. Whether you want to put on a little music, listen to some music, play a video game or something, do something on your phone, look at a video, watch one of our Bullish Bears videos, whatever you got to do to stay a little distracted in the market consolidation or in the market uncertainty, so you don't feel the need to jump into a trade if you can't control yourself while looking at the market. But it's always good to also be able to watch the market so you could sort of read into it and get some clues, but we can't jump at everything that we think is a potential opportunity. We have to wait for the market so we could react to the market. Building resilience in the face of losses is super important too. When we take losses, we gotta take a step back, but we can't be so hard on ourselves. We have to take it as, okay, this was a loss, this didn't work. This is why, and this is also why risk management is so important too, so these losses don't mean anything. When we take a loss, we should be able to take one win and make it all back. When we take two losses, we should be able to take one win, make it all back. That's just how we should be doing and how we should be trading. Being able to stay out of a trade is just as important as getting into a trade, guys. Gotta remember that. It's just as important. So if you're not in a trade and the market ends up going in the direction you thought it was going to go in anyways and that you would have bought, blah, 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 okay, so be it. The market went without you. Well, guess what? There are going to be other opportunities. But if the market wasn't giving you the proper confirmation to take that trade and it does go against you and you sat out, well, guess what? You just sat out of a losing trade and you're keeping capital in your bank. You're not taking that extra loss, and you're keeping your win rate higher because you're only taking those high probability trades. So trading psychology, just like I was talking about mental toughness, plays such a huge role. Overcoming fear and greed in decision making, FOMO, fear of missing out, understanding market sentiment and its impact on trading. Are we very bearish? Do we look like a lot of people could be short? Would a short squeeze hurt a lot of people now? Okay, well then there's a good chance of a pop. Gotta remember, if we've been in a nice strong trend, whether it's bullish or bearish, we have to look for areas where there's a lot of pain in the market, where if we reversed at this point, where there are a lot of stop losses, where there are new highs, new lows, and we reversed at this point, are a lot of people going to be stuck in losing positions, and are a lot of people going to be in a lot of pain? That's why they call it a pain zone. The psychological aspects of successful trading is super important. Emotions play a huge role. We have to see trading, again, as just as numbers. We can't see it as money, as crazy as that sounds. That's why risk to reward is so important. And trading futures over options can also give you some benefits because you're able to have a more defined risk to reward when trading. Another big thing is we cannot be swayed by other traders when we are already following our own trading plan. So a lot of people who do trade in communities or trade with friends, let's say I'm bullish on the day, right, but my friend is looking for a quick little pullback. Alright, well, he might be looking for a bearish move for a scalp, but I'm looking for a pullback so I could go long. So we might have different biases, but I'm not going to let him saying, oh, I'm looking for a pullback, make me go, oh, well, then I shouldn't be bullish anymore. He wants a pullback. No way. I want to listen to my plan. I'm going to execute accordingly. He could listen to his or her plan and execute accordingly. That's just the way it is. Everybody has their own bias, their own trading opportunities, their own trading plan and strategies. So risk management, right? Just like I was mentioning before, setting realistic risk to reward ratios, a good 2 to 1 as a minimum. As I mentioned down here, 2 to 1 is a good minimum for our risk to reward when trading, but 3 to 1, 4 to 1, and higher are great for comfortably growing our accounts. When I say comfortably, I mean the most stress free you can imagine, and yet still being consistent and doing well. It's truly, truly fantastic. And once you're able to be consistent enough, to be patient enough to wait for these 3 to 1s, 4 to 1s, and only take them when the probabilities are in your favor, and you start hitting 3, 4, 5 in a row, you're going to see your account grow nice. Then the market's going to shift around on you. Then, okay, you're going to take a loss or 2 or 3. And guess what? That's why we have to adapt to the market shift. But because you just took all those wins with a good risk to reward, you're so deep in the money on your account that these losses only make up for 1, maybe 2 wins. So you're already so good, and you're able to then adapt and adjust and get right back on track. Get another win, another 2 wins, back on track, just made up all those losses. You were on a win streak, took a little loss streak, now you're right back with just 2 or 3 wins when you were maybe taking 5 or 6 losses. So again, that's why risk management is so important. Diversification strategies to protect against potential losses, right? So we need to know what are some higher probability setups. Should we go heavier on those, right? So the 4 to 1s, the 5 to 1s over a 2 to 1, well, that 5 to 1 is going to net you a lot more than that 2 to 1. But if I have even more confirmations on that 5 to 1, I might see that as an A plus trade. And instead of risking 1,000, I might want to risk 2,000. That way, if that 5 to 1 hits, instead of me making 5,000, I'm making 10,000 on that trade. Whereas if it loses, all right, I'm going to lose X amount. That's okay. I knew the risk when I went into the trade, and I knew the reward when I went into the trade, and that's super, super important. The role of risk management in long-term success is a necessity if we want to grow our account. So if we can't get trades that are 4 to 1 all the time, because that is a really high risk to reward, not going to happen every day. Might happen a couple times, a few times a week, which is fantastic. But 3 to 1 is great. 4 to 1 really is good too. But 3 to 1, 2 to 1, as long as we're not really taking too many 1 to 1s, we should be doing okay. But we really do have to stay focused and not be chasing and not be jumping into random trades. Just be patient, take our setups. Bias awareness, right? We have to be aware when we have a bias, recognizing and overcoming confirmation bias. If I have a confirmation that we should be going long, but it looks like we've been making lower lows and lower highs, well, then I'm going to take a step back and just sort of wait and see if I can get a stronger confirmation, or maybe just completely crumple up my bias, throw it out, and wait for another confirmation to tell me exactly what's going on. Are we going to break this previous lower high and go higher and go bullish? Or are we going to create another lower high and go bearish again? I'm just going to wait. The impact on cognitive biases on trading decisions. The importance of objective decision making, guys. Facts over emotion. Remember that. Facts over emotion when we're trading. If you went into the market that day, you're just super bullish, but then there's a big sell candle, and then there's a big order block, and then Apple selling off, and Microsoft's weak, and all of these big signs, the VIX is popping higher, all these signs that bears are stepping in, and you're saying, no, it's going to go bullish, I'm just looking for some support, I'm going to go long at every dip, and you're buying every dip, but you should be selling every rip. Well, then you're going to be taking a loss after a loss after a loss, and that's why you have to be aware of your biases and really just listen to the market. When we're trading, we have to be reacting. Continuous learning, right? Our learning, our education is beyond important when it comes to trading and being successful. Acknowledge the evolving nature of financial markets, bullish markets, bearish markets, trending markets, consolidation markets. It is vital to stay informed. When is there news? Are there any holidays, events, etc. that could make an impact on the market? There are tons of available resources for continuous learning online, just like bullishbears.com. If you guys check that out, hit the join button, you get access to all of our courses. You also get access to our live trading. We go live every morning for you guys. I create trade plans every morning and send them out as well, and I also hop in the main chat with you guys too. Really a great place to be, to take some trades, to make some money, and to learn while you earn. Ongoing education for market adaptability is important to every trader, beginners and experienced, right? We always want to be adapting because the market is always adapting and shifting. Market analysis, use a combination of tools for comprehensive analysis. We don't want to just go in blindly. I don't want to just go in with an 8 EMA and a 20 EMA and just be like, if the 8's over the 20, we're bullish. If it's under the 20, we're bearish. That's it. No, I want to know, where's support and resistance? Where are these other stocks trading at? Where's supply demand? Where are the trend lines? Where are the volume shelves with the volume profile? And so on. Understanding market context and structure is crucial for traders to understand. Is we are in an uptrend or a downtrend. I meant to say if we are in an uptrend or a downtrend, because we don't want to be fighting that trend. If we're looking for a pullback in an uptrend, we don't really want to short that pullback. We sort of want that pullback to play out and go along, right? Buy the dip, sell the rip, right? So that's how we want to trade. We want to sell into strength. We want to buy into the dip. If it's a bull trend, we want to sell into the strength and buy into the dip, or reverse if it's a bear trend. All right, guys, I believe that is, no, we got a few more slides. Yeah, we got a couple more here. So trading plans, we want to create a structured trading plan every morning. If we're going to trade that day, we better have a trading plan before the market opens. Stress the significance of discipline and plan adherence. We need to be disciplined to our plans. If we're taking trades that aren't in our plans and we're losing on most of those trades, guess what? There's a reason you're losing on most of those trades. You're probably chasing, you're forcing trades, and you're not following your plan. And you will never get consistent if you can't listen to yourself. Making well-executed plans and journaling, reviewing said plans can make a strong impact on our trading experience and will help to see improvement. So again, guys, when it comes to journaling, this is really great for experienced traders and new traders, because when we journal, we could see, okay, what I do today, was it successful? Okay, for example, I took a long trade on NASDAQ, I got 50 points, I netted 1,500. It was a great trade, blah, blah, blah. This is where I got in. This is where I got out. I got in at demand. We have been in an uptrend. I've noticed we've been creating higher lows. I noticed we've been creating higher highs. I'm going to continue to follow the trend. Then we go to the next day. Next day happens. Another type of trade comes out. We follow the trend. Works the same way. Then let's say a trade occurs. We're following this trend and it starts going against us. Then we could journal, okay, I was following the trend, but we've seemed to break structure. I took the retest and went short, because we should always be prepared to play both sides when we're entering the market, and made my money, right? So I was able to stay green on the day, but the long stopped working. Well, now that I journaled it and was able to even just review it, if you don't want to journal it, just review your trades for the day and say, okay, well, it looks like my bear trades worked better today, so I'm going to really remember that for tomorrow, see how that plays out, because the market tends to run with patterns and trends. Adaptability, be flexible in response to market dynamics, news dynamics, volume dynamics, anything that could cause the market to have a bit of a shift or a bit of a change in structure. Learn from both successful and unsuccessful trades. Just like I was mentioning before, if I'm going long at demand and demands keep breaking and those trades aren't working out, I'm going to learn from that and say, okay, next time we get into demand, I'm not going to look for a long position. I'm going to look for a failed rally, and I'm going to short that failed rally and look for us to break through that demand. And then boom, look at that. Just like that, from that loss, It's not a loss anymore, it's a lesson. Now, if I took that trade, that losing trade was a 3 to 1, right? And I lost, we'll keep it simple, $1,000 on that trade, 3 to 1 risks to reward. Okay, that was a loss. Now that I learned from that trade, the next trade I take is from that loss I just took, is now a lesson. The next trade I take is also 3 to 1. So instead of losing that 1,000, now I win this next trade and I make 3,000. Now I'm up 2,000 on the account with a 50% win ratio. So how great is that? And that's all just because I journaled or because I reviewed my trades. So it's super, super, super important to go over your trades, guys. Can't emphasize that enough. Community engagement as well. I know this is sort of what gave me my little bit of a push as well to get even better as a trader. Some benefits of being part of a trading community include real-time discussion on market trends and opportunities, networking opportunities with experienced traders, and you can learn about different strategies and approaches from other traders in that group. Because think about it, guys, everybody takes their own journey in trading. Other people might have learned other strategies or other ways that might work out better for you that you might not even know of yet. You can get access to all this kind of stuff and more if you join our community, Bullish Bears. Check it out at bullishbears.com. Click that join button. We have monthly, yearly, and lifetime subscriptions. And that is it, guys. Thanks so much for watching. Click that like and subscribe button. Join our trading community to receive the trading courses, trade rooms, live streams, watch lists, real-time teaching, and more. All right, guys. Have a great day. Take care and happy trading.